HCL Technology numbers are out. Q3 PAT is at 1040 versus 18-hour poll of 948. Well, what a surprise. I think HCL Technologies has made, has decided to surprise market again and again on a quarterly basis. I'm waiting for more details. As of now, the first flash is that Q3 PAT, which is because HCL Technologies, they follow a different quarter, is at 140 crore versus 965. That's a bump up of 7.5%. That's a very, very strong sequential growth by HCL Technologies. I'm sure it is the BPO business and the infrastructure management service business which has really done the trick for HCL Technologies. Let's wait for some more details. Operating profit margins, management commentary, what has happened to the company at the EBITDA level. But prima facie, these numbers are looking extremely strong. Q3 revenue 6425 versus 18-hour poll of 6401. So revenue is in line with estimates, but the fact that PAT or profit after tax is way above estimates, which means we really could be staring at a strong margin expansion for the quarter gone by. Now just compare these numbers with what we got from Infosys. Infosys numbers were way below estimates. They were struggling, the management commentary was poor, and the fact that Infosys has not given a full year EPS guidance, it just tells you that in the near term they are not very confident of maintaining strong operating profit margins. I don't have the margin number, but it is safe to assume that some degree of operating leverage for HCL Technologies has kicked in. If sales are in line with estimates and if profits are way above estimates, that means that there is some degree of margin expansion. So super set of numbers. They've made strong numbers more like an habit now.
Yes, and we will wait out for the market reaction as well. Let's just wait by in terms of what the consolidated performance as well is like. The EBITDA margin too is actually flattish this quarter on a sequential basis, 22.4% versus a comparable of 22.5%. Shall we wait for the consolidated numbers and chat about the rest of the market, because that too deserves attention, and much unlike yesterday, today we've got support of the global cues as well coming in. So good going for the US markets overnight, and after having left it off with the Nifty futures nudging the 5700 mark, it would be interesting to see whether or not we again start off with a gap up and actually build on to those levels.
Okay, HCL Technologies, super set of numbers, and there is every reason to believe that markets are likely to reward those numbers. Also, because of strong set of numbers from HCL Technologies, markets, Infosys, the stock today could really be on the receiving end, because up until now, markets were giving Infosys a benefit of doubt, but it is now getting increasingly visible that what Infosys has reported for the quarter gone by and what they've indicated for FY14, it is more like a company-specific problem. EBITDA margins are at 22.4 versus 22.57. Q4 or Q3 for HCL Technologies, seasonally it is a weak quarter. So in a weak quarter, if they are able to protect the operating profit margins, that is great news. There is the fine print is not out, but as of now, I don't think there is a very big other income support at the PAT level. So if there is no other income support at the PAT level, then these are honestly super set of numbers. The headline numbers are above estimates. They've managed to protect their margins for the quarter gone by. There is a strong sequential growth, and at top line, the net income number is now out. Net income is at $193 million, which again is slightly better. So, well, the focus on Europe surely has done some trick for them.
Yes, they've added also about 37 clients this particular quarter. Just to reiterate the consolidated performance for HCL Technologies, and the net profit is coming at 1,040 versus the 18-hour poll of 948. So marginally higher than our estimates, and even the revenue is largely just about a tick or two higher. 6425 is what they've delivered in terms of their top line, and we were estimating a figure of about 6401. So it's been a flattish quarter, but yes, a little ahead of the street expectations. They've added 37 new clients in the third quarter. I'm just awaiting some more details in terms of what they expect the dollar revenue growth as well to be, because we're expecting a figure of about 2.9% in terms of the Q3 expectations. We're also expecting the GBP depreciation, which is likely to cause the revenue growth headwinds of about 50 to 60 basis points. Having said that, that hasn't quite happened, but let's just see in terms of what the dollar revenue growth is like, because we're estimating a figure of about 2.9%, both on the sales as well as the bottom line figure. HCL Technologies has been a little ahead of estimates, so largely in line, so to speak. So that seems to be taken care of.
Yeah, growth is visible, Aisha, and that is really the most important or the key monitorable. Markets always like to associate with stocks and companies where there is earning visibility and where the growth outlook is positive. So based on these headline numbers, I guess it's easy to understand that currently for HCL Technologies, the growth trajectory is certainly headed higher. They've managed to protect the operating profit margins. If you map the kind of operating profit margins HCL Technologies enjoyed till about 2 years ago, the operating profit margins were sub 20. Now they've got one of the highest operating profit margins in the industry. So I think they've done a great job. First, they focused on growth. They got revenue back, and now because of the operating leverage, they've also managed to, climb up the ladder when it comes to operating profit margins. Sunita, whichever way I cut and dissect these numbers, these are super set of numbers. And the real comparison here is that what Infosys communicated and what HCL today has declared, clearly HCL has managed to beat Infosys.
Absolutely. But if you see, most of the analysts believe that the Infosys is more company-specific issues. As far as HCL Tech is concerned, the revenue visibility is the maximum. If you look at the deal pipeline, is very, very strong. They have added 37 clients in this quarter also. We don't know how many deals they have bagged. But if you look at revenue is more or less in line with our expectation. 3% of the growth that we were expecting, they have exactly done that. In fact, the margin performance is much better than what we were expecting. So looks like their utilization rates have not come off the 82% mark they had in previous quarters, so expected to be there only. So 22.4% is much better than what Street was expecting. We were expecting it to come just under 22%. As far as net profit is concerned, it's 1,040 crores, which is 7.7% growth. So looks like their other income is higher than what it was in the previous quarter. So there is some help that has come from other income. We don't have the numbers as yet, but looks like that the help has come from there. But we will be waiting and watching out what the management has to say as far as demand outlook is there, as well as the deal pipeline and how many deals they have bagged in this quarter. Remember, the TPI data that came for March quarter was not very encouraging as far as deal bagging is concerned. So we'll have to wait and watch what the company has to say as far as deal bagging. But as far as the numbers are concerned, nothing to complain about. Net profit growth is very, very strong. Margins above 22% will be encouraged and will get a thumbs up from the market.
And the dollar revenue growth as well, Sunita, has been at 3.2% at $1191 million.
Exactly, that's better than what we were expecting. We were expecting 2.9%. They have done 3.2%, which is better. There was expected to be a cross-currency hit, so that's why you're seeing that the revenue growth in rupee terms is 2.4% in this quarter. But there is nothing to complain in the results so far. The net profit outperformance is expected to be getting some help from higher other income. We are waiting for those numbers. But as far as revenue growth is concerned, they are better than expectations. But the margin performance is way better than what Street was expecting. So looks like the utilization rates are better, as well as the cross currency hit is not as severe as market was expecting. So 22.4% will get a thumbs up from market.